Hello everyone. Today is December 17th, 2022. I want to make a video about the Renko charts and what are the advantages and disadvantages of using a Renko chart in comparison to the minute charts basically. So in the screen I have in the right side of it I do have a chart that is a uni Renko bar. And then in the left side, you see that I have a 5 minute chart in the upper side and 2 minute chart in the lower side. So basically the movement is happening here to the downside and to the upside, and you see how smooth these movements are. So let's define what a Renko chart shows in terms of its value, how it's formed. So the difference in each bar, it's 4 ticks. Okay, in this case, this is the size I'm gonna open here so we can understand how it's configured. So the first value is the tick trend. So the tick trend basically is the difference in between the high of each bar. So you have that value there, and this value here, and that value there, and that value there, and so on. The distance in between the upper part of this candle is 4 ticks. Okay. Now the open offset is the distance in between the high part of the candle and the low part of the candle. Okay, so each time that the price goes 1 tick above this price or above this above this price, then it's going to paint immediately a new candle that is going to be this size. Now the price can fluctuate in here, and that price is going to be reflected in there on the price. So it's going to go up and down, and it's going to move in this range within the 10 ticks that the open offset is saying, without changing the size of the bar. If you see, the price is marked with this box right here. Now the market is closed, so there's no movement, and the market closed on Friday at 38.87, but so it's in the upper side of this candle right here. Okay, the last value is a tick reversal, and so every time that, in this case, the bar moves in the opposite direction 20 ticks, the bar is going to change color. So you see the distance in between this high on this tail and then this low, that distance is 20 ticks. Same here. You have the high, the low, and the high, and you have 20 ticks. Okay. Now, what is the advantage of using this Renko bars? It smooths the fluctuation. It hides the fluctuation of price. So as long as the price is within this bar, then I'm okay. I don't see the change on the bar, and it's not going to show it as it does in the minute chart. So let's say that the price goes from this value to that value up there. So you see that the price is going to do something in this area, and then it's going to move to the next bar. As long as moves to the price moves above this bar, is going to form this one. It can go down, and then can go up, go to the next one, and open it. So every time that touches 1 tick above this value, is going to form a new bar, and the price can fluctuate there. So in that way, it smooths the visual side of the bar. Now, let's compare this one with the time chart. So I'm going to look at this low here, this pivot low, and I'm going to analyze what's going on in the minute chart. So I'm going to go here. Let me find it. It's not this one, it's a little bit over right there. Okay, so let me expand this one a little bit. I'm gonna see what it does in the 2-minute chart. Okay, I'm gonna expand it there. So if you see, each one of these bars is 2 minutes. So it has an open, a high, a low, and a close. So so the price, it's reflected in the bar. So it doesn't just paint the bar, but it moves along with the bar. So we have 2 minutes where the price is moving in this range, and then another in the next 2 minutes, the market, in this case, opened here at that value, had a low, a high, had a low which is the same as this value, and then had a close. Okay, so the price is actually painting the candle as the price moves. So that noise there, I don't see it in the Renko bar. I just see it in the minute bar. Now, if you see here, that low value here is the same as the low value on the Renko bar. You see that it's 38.57.25. That is the low value of that candle. And now it started to move to the upside, and then the next 2 minutes is painting this candle right here. So it's moving up and down, and then the next candle, another 2 minutes, it's going to move up and down, and it's going to move up and down also in the next one. But in the Renko bar, it doesn't really paint another bar unless it moves to the next value, and then it starts oscillating again. So you have 2 minutes there, another 2 minutes there, another 2 minutes there. So we have 6 minutes, 8, 10, 12. Let's see what it does in here. So you have 1, 2, 3, 4, 5, 6, 7. So 7 times 2 is 14, 15 minutes. So you see that in the 15 minutes, it created 4 bars, or I'm sorry, it created 1, 2, 3, 4, 5, 6 bars of 2 minutes. Okay, 6 to 7 bars. Now, when the price goes above a tick of that range, then it will create a new bar and will start oscillating on that bar. So that happens in there. So let me make a distinction here. So the high of this bar, or this series of bar, and the lows of this series of bars is actually the size of that and also this. Okay, so the price in here fluctuated in this area here, right? But in here fluctuated in this same value right there, and you do have a wick that it's painted to the low side. So that bar there could be interpreted as this bar right here. Okay, So you have much more noise in the 2-minute bar than in this area, in this one here. Actually about 6 to 7 bars. In the 5 minutes, since in the 5 minutes, let me expand this one a little bit to explain what happened in the 5 minutes. So in the 5 minutes, you should have only 3 bars that represent the value of the Renko bar. So surely enough, you have, I'm gonna paint it again. So let me do it this way. So you have a value, a high in here. You have a low in here, and you have a little wick right there, right? So which is that wick that I see there. And so this is going to be the Renko chart that is in this in here, presented there. And it's going to break to the next bar right there, and then moves all the way up there in that movement. So you see that only 1 bar in the minute chart, in the 5-minute chart, 3 bars represent 1 bar of Renko. And in the lower part here, it was 6 to 7 bars. So there's lots of smoothness on the Renko bar, and that's why I like to use them. Let me see if the bar is actually moving to the upside in a much more easy way than if I'm looking at an up and down, up and down, up and down for the minute bar. Okay, so what is the disadvantage? The disadvantage is that if I don't catch the entry in here, I don't have really an opportunity to catch the trend or the move in a different area. So let's say that I have this move. I have to, my strategy tells me to enter in this area here at that value, or at the most at that value there. But if I lose this either one of these bars, and the price moves into the 3rd onto the 4th bar, then I don't have any other indicator that tells me that I could enter this trade, this trend in the higher side. In the minute chart, you can have these fluctuations, and you can have some signals that the trend is going to continue. So you can use that as a entry trigger for the next for the move. Okay. Now, since I don't see the price oscillation within the bar, right? I'm obligated in this type of bar, or in this size of bar, to enter trades when I see signals. And one possibility could be that entry right there, could be that entry right there, could be that entry right there, and that entry right there. Okay? I cannot, with this bar, I don't have any signal to enter any trade in between, right? I could enter here, here or there, here or there, here or there, but not in between. Okay, so to avoid this issue, I would like to see if there's any intermediate or any signal here, since I missed this one, that I could enter the trend with a trigger. And what you can do is to choose to use a smaller size of Renko bar. And I have here the size of bar of, let me show you, 2, 5 and 10, which is half of this one here. And the idea is that this is going to show me more entries in that same period of time. So I'm going to go back to the same area where we are, and we're going to analyze what is going on. Okay, so I'm in there. I believe that I have to. Okay, I'm going to move it a little bit, right? So you see here that I have this entry at that level up here, right? In this entry right there, that would be around this area here. So in the smaller bar, I can have an entry anticipating the move, so I could enter right there, okay, with a smaller risk given by that wick right here, right? If I wait until it goes all the way up, then I'm going to have a little bit of retracement in the smaller Renko bar, right? So I'm going to call this one small, and these bars, I'm going to call them large. Okay. In the large bar, then I have an entry here at this value, right? And then if you see in the next bar, there's a little wick right there. So second wick, which is that wick right there. Okay. So I don't have a new entry here unless I decide to enter one tick above this value. I could enter it before, but I don't see what's going on in there. In the case of the small bar, I do have a new entry right there. So I have one entry here, which is lower than this entry up here, but I do have a second one here. If I analyze even a smaller bar, and I use, let's say, a one tick of distance in between each bar, I probably am going to see that this candle here, I'm going to have another wick and another potential entry right there, because it's a smaller. So if I see the smaller one, then I could have an entry in this candle here. In the size of 2, I have one entry right there, a second entry right there, a third entry right there if we are going long. Okay, nothing in between these two, unless I move again the size of the bar even smaller than this one. Okay, so so that's the reason why I use Renko bars. Basically, it smooths the price. It gives me a new bar every time that goes above this value, and it paints the whole bar. It is painted at once, and unless the price goes below and then recovers, then it's going to create a wick. But if not, then it's going to maintain the size of the bar, and the price is going to be reflected in this area, but not in the bar itself. Okay, so I think that covers the Renko bars and why I use them. I really think that that they are way more comfortable to trade and avoids false entries much better than a regular candle that belongs to the minute charts. All right, if you have any questions, please put it in the comments, and also join the Discord server. So I would be happy to answer any questions, or give a little bit more information of this strategy. Thank you so much for watching.